Good afternoon, everybody. It is Thursday, September 15th, 2022, and we just got done talking about fantasy baseball and where Aaron Judge was going to end up. So we've already done all the important stuff. Thank you very much. It was nice talking to you. Wait, stock market? You want to talk stock market? Okay, let's talk stock market. I'm a little hyper today. I've had a water that my daughter gave me that had caffeine in it, and then today or yesterday, you know what came out? Pumpkin spice. Yeah, that's right. You can get your pumpkin spice coffees and lattes and whatever else they put it in. And so I'm drinking one right now, and yeah, I'm triple caffeinated today, I think. So let's try to get a lot done in a little amount of time. Let's go full Hemingway if we can. I think I've already blown it. I've said too much. If you're a Hemingway guy, then you know, or a Hemingway person, then you know what the joke was there, right? What was Hemingway's thing? It's the way I write. Say as much as I can with as few words as possible. Not the way I speak, though. I think it has something to do with growing up in a bar culture in Milwaukee. All right. So investment quick thoughts I put out a couple days ago. Inflation, the Fed, a double stock market bottom, blah, blah, blah. Heard it all before. So far, our forecast for this year has been spot on. We got the early year correction. We got the rally. And now we're seeing more correction. And at the same time, inflation is starting to dissipate. Even though the August number was hot, it looks like everything in September and going into October is cooling down. And what are we getting from the whole retail side of the economy? Is everybody has inventory. Everybody figured out last year, order your stuff from China way early. You know what I saw at Target yesterday is they have pods out in their parking lot because the stuff that they want for Christmas came early. I went inside and I asked the general manager, I said, what are those pods out there for? He goes, yeah, normally the stuff for Christmas shows up end of October, which is perfect, but it showed up at the start of September. So we got 4 pods sitting out there for the last couple of weeks. And I said, has that been happening a lot? He goes, yeah, we didn't know what to order or when to order it. We don't know how long it's going to take to get here, if it's going to be fast or slow. We had no idea after the last couple of years. So we ordered everything ahead of time. And some of it still comes in late. Some of it comes in way early. You know, he even said he thinks they're just messing with us. I was like, maybe, I don't know. But it's pretty interesting when you walk around town and you ask people questions about what you're seeing that's out of the ordinary, some of the answers that you get. And, you know, I drive around the whole country doing that. And I ask people questions and I say, what's going on with this? What's going on with that? Why is that way? And they tell you. You know why they tell you? Because nobody ever asks. People just kind of look and they're like, oh, I'm not going to ask. Ask once in a while. When you're driving around and you see something that you haven't seen for a very long time, why are there pods in a Target parking lot? Why are there, shelves that are empty? Why are there shelves that are so full that they have like just boxes on the ground? Why are rents going up? Why are rents going down? Why are there people selling their houses in 5 minutes? And then why are there houses hitting the market that just sit for months and months and months? All of these observations are important. And we're going to talk about something today that I haven't talked a lot about, but as I've told you before, I was a quant before being a quant was cool. You know what I learned about quants is that most of them are full of pick your favorite farmer's word. They are. It's bullshit. There's a lot of quantitative analysis out there that is pure and utter bullshit. And I've told you that over and over again. If you're using a factor model, factors are the inputs that give you the magic formula, and all of a sudden you're supposed to know the future. If you're using a factor model that has a double-digit or triple-digit number of factors, you're just nuts because it doesn't work. Too many moving pieces. Almost every relationship in the economy is 2 or 3 or 4 off. That's it. There are no 17 factor, 27 factor, 70 factor, or 150 factor, or we use thousands of factors. There's no such thing. You know why? Because you should just beware nerds bearing formulas. Some guy in Omaha said that too. I know lots of Warren Buffett quotes. You know why? Because I've been reading his letters since 1998. And I went back and read all the ones from before 1998 before I started. So I've read every single Warren Buffett investment letter for Berkshire Hathaway. And some of the things that you learn when you do that sort of study is that farmers' words are probably the best words out there because there's so much bullshit that it's off the charts. And if you read Warren Buffett's letters, what you find is that he's calling out bullshit year after year after year. And people ignore him. He was the richest man in the world for a while. and people ignored him. And he made his money investing. He didn't found Microsoft, right? He didn't, found Amazon. He didn't sell 1 million widgets or iPhones. He looked at the world around him and made very simple observations, and then he invested in those observations. And he made more money investing than anybody ever. And what are the two things that he did? He was an asset allocator into the industries that he thought were advantaged. What does that sound like? Does that sound like the great divergence to you? Sort of. I keep trying to tell you, invest in the things that are going to do well in the future. Pick the industries that have the tailwinds, and more importantly, the what? The money flowing in their direction. Because if you do, you could just buy sector ETFs or industry ETFs for most of your asset allocation if you don't want to actually pick the stocks because the stocks scare you. So when I do the Global Trends ETF report every month, I did it a couple of weeks ago, right here, Global Trends ETF for September. It's also over at Fundamental Trends. You could really just stick with that. You could, because I'm looking at all the stocks that are in these funds. I'm looking at the industries. I'm looking at historical performance. I'm looking across multiple time frames and different economic backdrops. Now, Buffett augmented that by picking out the best stocks in those great industries. And he did something that other people don't really do very often, but that I do a lot of. And I got it from Warren Buffett. I did. I mean, I got trained by a great options guy, but the guy who convinced me to sell cash secured puts over and over and over again was Warren Buffett. He does it all the time. That's how they enter some of their positions. That's how he makes some of his great big hedge bets. One of the things that Warren Buffett has done a couple of times, or 3 times, I believe now, is he has basically made a bet, and hedge funds usually take the other side, that the S&P 500 will be higher in 5 or 10 years. That's it. That's a simple bet. Sells a cash secured put. Market will be higher in 5 or 10 years. Pay me. Pay me that premium. You want to be bearish? Fine, you can be bearish. I'll take the long side of the bet. So once again, I implore you, if you have a 6 or 7 figure portfolio, you're just crossing into a 6-figure portfolio, which I know a lot of you are on that journey. I know what the demographics are of the people that I work with. I know there's a big hunk of you who are retired. I know there's an even bigger hunk that are within a decade of retirement. And there's another group that's 10 years or further away from retirement. But once you get to a 6-figure portfolio, cash secured puts is something that you should be selling, because the ability to harvest premium just for letting the calendar turn is pretty powerful. And if the bet doesn't go your way immediately, right, because the stock or the ETF goes up, you just end up owning something that you really like for a pretty good price, cheaper than it was today. So once again, I tell you, learn cash secured put selling basics, especially if you're approaching a 6-figure portfolio or already at 6 or 7 figures. Even if you're 75 years old and you're just like waiting for me to say buy Vici because the price is right and you're going to get an 8% dividend or 7% dividend or whatever it's going to pay when the price is right. That's fine. But imagine if you sold that cash secured put and treated it like a limit order to buy, and somebody paid you to write a limit order. That's just how you should think of it. I'm getting paid to set a limit order to buy. The worst thing that can happen is you keep the money. The best thing that can happen is that the price of the stock goes 1 cent lower than your target price, and you get it at the cheapest amount that you could get it for. But even if you buy it for a couple dollars more than what it ultimately got down to, so what? It's not about getting every single trade perfectly. It's about making a long series of good trades over a long period of time that are all pretty good. Just keep collecting that money. Somebody texted me or emailed me a while back. I think he actually texted me. I don't know. He got my number. Oh, he did a consult. That's how. He goes, hey, I just had 4 cash secured puts expire. So I bought the stocks anyway. And it was perfect because they got close to getting assigned to me, but they didn't. And I got this premium and I ended up getting the stocks for even cheaper. It all worked out. So even though he didn't get assigned the stocks, he didn't have to buy them, bought them anyway. They went up. 3 of them went out. 3 or all 4 went up pretty quick. He goes, yeah, and then I sold the covered call because I had bought a little bit more than I knew I should just for a rebound rally. Then I figured I could sell a covered call. So I got all the way up to a half position and I wrote the covered calls when the stock rose. I had this premium. I had that premium. And then the stocks dropped a little bit. The calls expired. So now I had bought this stock. I had 2 premiums against it. And I'm holding it for the long term. All in, I actually got a price lower than the 52-week low because of the premiums. So make sure you come to that retirement income options webinar on Mondays or watch it on YouTube, because in the next 2 or 3 months, we are going to have some spectacular option selling and stock buying. So investment quick thoughts. What did I talk about here? Pretty simple. Inflation topped expectations in August. It means the Federal Reserve probably going 75 basis points again. I think it's Nomura, somebody. There's a couple out there that think they might go to a whole point. I don't think so. If you saw Jeff Gundlach the other day, he said that he thought that they should only raise a quarter point. Remember, he was a guy who said the dollar was going to collapse. So he might just have a bet going bad, right? Because the dollar's gone straight up. Right, a year ago, Gundlach said the dollar was going to collapse, and it's gone straight up. So take it with a grain of salt. Wow, I wish somebody would have told us the dollar was going to go up. I don't know. And maybe that's too hard to know. Then again, maybe somebody's been saying it since 2012. The dollar is just going to keep getting stronger as the world changes. Why? Why do I keep saying that? So many reasons. Now, there'll probably be a pullback, but the new range for the dollar is going to be higher than the old range. And it's going to be tied to the millennials entering their peak earning and spending years, which is happening imminently. And because the petrodollar is becoming less important, we don't need Saudi Arabia anymore. We're like 3 years away from being able to tell them to go pound sand, which we've been waiting to do since 2001. And we all know why. Long memories, never forget. So put to call ratio was all goofed up over the last week or two, likely to flip back the other way. It already started. So since I published this, put to call ratio has already started to move the other way. Why is that important? Because when not enough people are expecting the market to go down, that's generally what happens. It goes down. Too many people on one side of the bet. So when these ratios get out of whack, there's a correction. The Fed knows that the first quarter of the year is usually the weakest. They also know that everybody's going to be discounting products in December. So we might actually have an uptick in growth in December from the standpoint of transactions, but GDP might not go up because everything's going to be, discounted 10, 20, 30, 40%. I mentioned, I think in this article, I said, make sure that you are prepared for Black Friday, as well as probably, the 2 weekends before Christmas when they have another wave of sales? Somebody who's a professional shopper might know that. And then the after Christmas sales. So you might want to clear out some shelving space in your basement or your garage or wherever it is you keep stuff that you buy ahead of time. Baby clothes, shoes. That's what I'm thinking. Gonna buy a lot of baby clothes, maybe some toys that he's not ready for yet. For sure, a baseball glove for both of them and both my grandkids. So when this market double bottoms, and that's what is going to happen. What we just don't know is it going to blow through the bottom, or is it just going to approach it then reject higher? Don't know yet. What's the wild card? It's Russia, right? So I pulled this out of Foreign Policy magazine. This quote here talks about different things that could happen. Now, I've told you that I think that Putin will be out of power sooner than people think. And there's two ways that could go in Russia. Either the hardliners, which is what this thesis is, stay in control. And they do things even more drastic than Putin. That would be really bad. Really, really bad. But there's another thing that could happen. Putin could get thrown out, and more moderate parties could take over the country. A lot will depend on the generals. But we know that there's a couple of key generals that are on the side of the moderates and would like to be more integrated with the West. And for a certain bribe, certain amount of money, they're willing to make it happen. If you read Bloomberg, but one of the writers at Bloomberg always talks about the power of bribery in diplomacy. You can laugh about it, but it's true. And I've been talking about this since I was an undergrad, and I was a student with a Professor Garnham. And I said, why don't we just pay more people off? And he goes, oh, we do a lot of that, right? Bribery. That is probably the number one thing that happens in diplomacy, other than trying to convince people that, what's good for us is also good for you. And here's a check, some gold bars, and some money in a Swiss bank account. I think there's a very good chance that what we see out of Russia is this. I think that we see the right wing put down pretty hard in Russia because certain generals have the power to do it. And they will be incentivized, right? Bribed, incentivized to make it happen. And the moderate side is bigger anyway. I believe you're going to see something incredibly good for the world come out of Russia. I think it's going to happen in the next year or two. And when it happens, that's it for oil. Price of oil and gas comes back down. That $60 to $80 range on oil, and natural gas will give back half or more of the increase in price. But it might not be for a year or two. Between now and then, we got to figure it out. And if the right wingers back Putin or throw him over and go further right, further into attack mode, then really bad things happen. But that's not the high likelihood probability. So keep that in mind, because it's important in how a lot of things in energy play out. Now, another thing to keep in mind on oil and gas is that coal needs to go completely away. So there really is no problem with demand for natural gas for a decade or longer. The EVs don't hit for 2 or 3 or 4 years. So that's the oil side. But once oil does start to flatten out even more and then turn over probably by around 2030, then associated natural gas falls as well. A lot of the natural gas comes at the same time that they drill for oil. So natural gas is going to be pretty firm. That's why I said they won't give back all the gains, maybe half. That'd be typical of a correction in a bull market. But coal is doomed. Oil is going to have a long, slow death. Depends how long we keep repairing cars that run on gasoline. But by 2040, there's a lot of laws out there about even using oil in a car. 2050 in China and India. Those are the directions they're going. And energy is the linchpin in inflation. You can let anybody talk to you about Milton Friedman you want. I've been studying Milton Friedman forever. I actually read the work. There's a lot of people who give opinions that haven't actually read the work. They haven't. They just accept an answer they were given and they repeat it through their whole career because they were a crappy student to begin with. They didn't do the reading. Jim Rogers is right about that. Most people don't do the reading. I became a millionaire for one reason. I did the reading. That's it. That's all I did. I did the reading. I understood that there's a lot of bullshit out there, and I followed the money. And I learned from people who have already done it. You've heard me tell stories before. Those are all things that I was just told to do when I was around 20, 21 years old. In those formative college years, Grandpa, my first landlord, my dad, and some uncles all told me similar things. Follow the money, ignore the bullshit. It's mostly bullshit. And learn from the people who actually did it. Warren Buffett, Peter Lynch. So very simply, I'm going to tell you this. If Russia resolves well, and I think it will, or at least go back to neutral, unless it gets worse, really good things are coming. So again, it goes back to my theory of as long as we don't blow up the world, we're in pretty good shape. So you have to look past the rockiness of the short term as a threat and think of it as an opportunity, because that's what it is. Transition is always an opportunity, always. And it feels stressful and it looks bad up close in your face. Put your hands in front of you, create some vision for yourself, right? Push everything aside. Say, what is it going to look like in 5 years? What's it going to look like in 10 years? And your vision for 5 years, because it's closer, will be better. But you should kind of see what's out on the horizon 10 years out. And if you do that, you're going to do really well. And you think, what is Kirk getting at today? Oh, I have a plan. So, yeah, it was Nomura. Nomura thinks that Powell will do a whole point. Now, if Powell does a whole point, it means what? It means he's dumb, right? It just means he's dumb. And if he's dumb, then we got a problem. When he first took office, I was worried that he was dumb. Next week, we're going to find out. If he raises a point, he is dumb, and we got a problem for a few months. Because if the stock market crashes, because he raises a point, he gets the correction that he wanted, he's going to get yelled at, then he's going to turn and face the other way in November or December. If he raises a half a point or 3/4 of a point, well, let's go backwards. If he raises 3/4 of a point, I think he's kind of stuck in place and he's looking for some symmetry. And symmetry, as we know, is what people look for. It's not how you make money. We look at things that are beautiful because we see the symmetry. Salvador Dali said, look at it a different way. Look at things the way they are, not the way that you want them to be. You find the beauty in that. Well, what does that mean to me? That means that if he raises a half a point, I think he's really smart and he understands the asymmetry of it all. Gunluck is saying a 1/4 point because I think he needs the dollar to fall, but he's on the right track. I've been telling you all year, inflation was going to fall after Labor Day. It's happening. All the indicators are saying that inflation is starting to fall. Almost all, virtually all. And if the price of energy falls, there you go. That's it. Game over. Inflation's done. And I still think in about 3 or 4 years, we are going to be talking about deflation again. Now, do we have to have a recession to fix what's happening? No, we just kind of have to wait the Russians out. We don't need a recession. I've said that over and over again. We don't need a recession. Those Austrian economist wannabes and the knuckleheads that just glom on the stuff, they say it over and over again. Well, Friedman said money is blah, 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 blah. Shut up. History says we don't need a recession. We don't. And there's not a way to fix the labor market without hurting a lot of people. So as I have told you, destiny, right, is demographics. Demographics is destiny. What have I added to that? Demographics and robots are destiny. I just went to the grocery store this morning for a couple minutes. Guy in front of me says, I wanted to just go through the self-checkout, but it wouldn't let me. And it's because he had bought a meal, and the meals that are prepared there don't go into the system, so you can't do the quick checkout. I get up to the woman, I say, did he just say he would rather do the self-checkout? She goes, yeah. I go, not me. I sit in front of a computer all day and I type and I read. So go into the self-checkout, I would never do it. I try to never do it. I'd rather go through the line to keep somebody employed. And I said it's part of my socialization. So you know those dogs that don't get out enough? Yeah, sometimes I feel like that. So I get to come here and I get to say a couple of things to the person who's checking me out, checking out my groceries, right? I haven't been checked out probably in a long time. The future is going to be shaped by demographics like it always is, and technology, this fourth industrial revolution. We're going to find out the shape of the transition next week. If he raises a full point, he's dumb. If he raises 3/4 a point, he's just trying to give people symmetry, or he needs it. And if he goes down to a 0.5 point, then he's probably really smart. I think he goes 3/4 a point. I don't think he has the guts to go down to a 0.5 point. And I don't think he's gotten the full stock market correction that he wants. So if he goes 3/4 a point, and he's not as dovish as people want him to be, he'll get his correction, probably without breaking the economy. And he can change course in November or December. I'm predicting he changes course in December. But it's a roll of the dice. Could be a month in either direction, a meeting in either direction. Let's go back to those quants that I mentioned earlier on. If you do a search for quant on Bloomberg, you get all sorts of hits, okay? It's a thing. Bank of America quants say that there is a 100% chance that the stock market sets new lows because they have a chart that does a thing and it's saying a thing that hasn't happened yet. It needs to get down to the number 20 for the bear market to be over. Now, it doesn't mean it can't shoot up before it comes back down later. So who knows if there's a more bull market rally before things come down. Based on the presidential cycle and based on the fact that we have a whole different interest rate regime now from the last 40 years, right? Interest rates have been coming down for 40 years. They just started going back up in the last year. Some things are going to be different. Stock market doesn't have a lot of comparables. Only 150 years of data, really, and most of that data starts in the 1920s. So when you hear about factors, remember they're based on back testing, and there's not a lot to back test. They're doing statistical analysis based on limited data sets. Does that make sense? They're not truly doing scientific work. So I happen to think this is going to prove to be right. I think it's going to have to get back down to 20, and we will test the bottom. Doesn't mean we go through. And if we do, it doesn't mean we go through a lot. But we're going to get down to around the bottom one way or another, I think. I'd be wrong. But if I'm wrong, it means the Fed didn't get their correction yet. Because the stock market, the large cap companies, the large cap no growth companies, the large cap no growth need cheap financing companies are still way overvalued. Even though REITs have come down, a lot of them are still overvalued. Because the CapEx that they have coming to transition to newer technology and cleaner buildings and working from home and different shopping experiences, we're in the third inning of that stuff. Fourth, maybe. We're not even in the second half of the game on that stuff. There's a lot of money that has to be spent. If interest rates are closer to normal than zero, it's tough. It's tough. I keep telling you that I'm looking at real estate investments. I'm talking to three very rich sets of investors because they hear what I've been saying. And they're like, yeah, you're right on it, man. That's how we're investing tens and hundreds of millions of dollars. So like I've told you for a couple of years, all my new income goes into real estate. But there's certain real estate I want. And I take a look, I'm looking out the window right now, looking at my condo complex. And I'm like, would I buy this condo complex lock, stock, and barrel if I could? I don't think I would because there's just too much CapEx. What could I buy my entire condo complex for? Let's find out. We'll say the average condo is $200,000. There's 196 of them. I could buy my entire condo complex for $40 million. There's not a chance in hell I would do that. The land is probably worth $4 or $5 million. I maybe go up to 10. Why? Because the buildings here need a lot of work. I know that because I live in one. Well, if you go walk around a mall and you take a look, or you go to an office building, a high-rise office building, or a mid-rise, and you see all the offices empty, they have to transition, but those buildings often have a problem with plumbing. Simple issue like plumbing. They can't switch to residential real easily. There's all kinds of sunken costs there to begin with. They got to be overcome. do certain things, right? There's just a whole lot out there. If you're ever in the Milwaukee area, go to the Drexel Town Center or find the mixed use communities, usually built around grocery stores and malls that have been being developed. Again, we're in the early innings of that. A lot of CapEx coming. So I think in an era where interest rates are going to be a little higher for a little while, at least, and maybe with the millennials taking control of the economy, maybe this was the great interest rate normalization that I didn't think would happen until the end of the decade. Maybe it's been done. Maybe we just have a little pullback in interest rates to get us out of a recession in the future. But maybe mortgages are supposed to be middle to high single digits and not 2.5%. Maybe. Who knows? We will find out where equilibrium is over time. And anybody telling you that they know what it is right now, they're bullshit. I call bullshit. Bernstein says that stock picking is getting really hard. I disagree, because if you're a value investor like me and you're looking for assets or growth that is underpriced, right? You can buy growth that's underpriced. So the PEG ratio that Peter Lynch used was all about. I think it's getting easier, right? Bernstein saying that we haven't hit the bottom yet. That stock picking is going to be hard. I disagree with stock picking is hard if you are actually doing the reading, right? And then this article turns around and says, oh, but the quants are going to have it tough. Well, wait a second. It's going to be hard for the stock pickers or hard for the quants? Hard to know, right? But they did flip around. They got rid of their inflation bets. Told you that was coming. Then again, maybe the quants are just all deluding themselves. Maybe their factors are bullshit. Not all of them. 2 and 3 Kevin Bacon's removed. You don't need 150 or 200 or 75 factors to tell you what the general direction is. And because you can't be precise to know exactly what's going to happen, doesn't matter what all these factors tell you, because it'll never be right, probably more than once in a row. So I laugh at the Seeking Alpha quant guy. Whatever. He's just selling something. You need a single digit number of factors to give you the right direction. And then if you know what things are actually worth over the long haul, right? Think about real estate. You're going to be mostly right most of the time. You can seek perfection. You won't find it, but you might find excellence. And that's what we need to concern ourselves with. A lot of good decisions in a row. Lots of good small decisions, really. They add up to a big thing. So all these guys saying different things. What should we care about? The market bottom? Or should we care about what our companies are worth? What they'll be worth in 5 years? I think that's what we should be focusing on. Everybody who's trying to bottom tick things, you're never going to get it more than once in a row. And it'll be accidental when you do it. Scale in slow and at wide intervals so that you get a price that's around the bottom or within 20 or 30% of the bottom at some point. Because time will fix everything else. If your judgment is good, you get a lot more right than you get wrong. You throw out the losers on track. The big winners are really going to carry you. So I was figuring it out a couple of weeks ago. I've invested in over 150 companies in my career directly. 25 years. That's less than 10 companies a year. Kind of mind-boggling, right? And I made all the money on, about a third of those companies. The other 2/3 didn't matter that much. A few of them were losers, right? So those had to be offset. All right. So one of the technical signals that you hear people talk about is market breadth. And momentum traders talk about market breadth a lot. So I got involved in a thread. Seth Golden's a pretty good guy. I don't think he is quite as circumspect as he needs to be, but he is a pretty good trader, and I watch him. And he was talking about, and I think he made a mistake here, he was talking about market breadth. Remember, I think it was late last year, everybody was talking about how market breadth was going to carry us, right? Market breadth is going up. Everything's going to be great. You're talking about it right there. Market breadth is going up. Everything's going to be great. Has it been a great year? Doink to doink to doink to doink to woo. Now I've got it back. This is a rebound rally. This is classic shape. Now, does it come all the way back down here? Hard to know, but we should at least split the difference, which means there's a significant correction left to occur. Shape of it? I don't know. I don't need to know. That's the thing that you need to understand. You don't need to know the shape of things to come in the next couple of quarters, as long as you have a good view on the next 5 years. And whatever happens in the short term, you just use it to buy the things that you like for 5 years out, right? Goldman Sachs, expect new bear market lows. Some other quant guy says, well, just start getting into the climate change stuff, which is what I've told you. Climate change, fourth industrial revolution, blockchain. Those are the big secular trends. Use the volatility and the dips to buy those. I'm going to finish on Ethereum. Then I'll give you a couple stock ideas off air, because this is not the stock show. Monday is the stock show. This is the big picture show. Macro dashes, even though I don't write it as regularly as I should. Ethereum finished the merge yesterday, and it seems to be working. So now the cost of energy for Ethereum drops overnight 99%. So this isn't digging for Bitcoin, whole different system, and it works. And they're going to get the bugs out over the next several months, probably fix whatever it is they need to fix. And you're going to get breathy headlines. This thing broke. That thing didn't work. Breach, privacy, whatever. It's going to happen. I'm telling you right now, if you have the money to do it, buy 32 Ethereums. Why 32? 32 Ethereums allow you to stake your coins, not just lend them out, actually stake them as a validator of software. This is what the backbone of digital contracts is going to be made on. Buy yourself 32 Ethereum if you can afford it and get in on this. And think of it as long-term savings, if nothing else, because you're going to make between 5 and 10% a year on the interest. And then price of Ethereum probably goes up quite a bit because without new mining, Ethereum is going to become more valuable. There's going to be more Ethereum introduced in the system, but it's going to be scaled and predictable. So if you haven't learned about this yet, learn about it. If you've got $50 or whatever $1,000 it takes to buy 32 Ethereum, you should do it. Now, it shouldn't be more than about 5% of your money. So you already have to have about $1 million to do this. So, you shouldn't go nuts on the asset allocation. But if you're pushing $1 million already, look into this. You're an accredited investor. You're about to become an accredited investor. This is something you should learn about. This is something that might be good inheritance. All right. Let's call it a day. It's one of the last warm days. Our pool closes at my condo complex on Saturday. I got them to keep it open an extra week because I was the squeaky wheel. And then I got like 10 other squeaky wheels to squeak. Lesson learned. Got to squeak sometimes. The ETF that you want to buy, by the way, for all of this blockchain stuff is DApp, D-A-P-P. Right, VanEck, Digital Transformation ETF. It's on the Global Trends ETF report. Buy it, buy it, buy it. It doesn't matter if you're retired, you need to have some of it. This is a big deal. These digital contracts and Bitcoin and everything else is a big deal. And DApp is the one that I'm buying in my IRA. I'm also buying a couple stocks, but I'm buying DApp. It's easy. It's the right companies. It's diversified across the blockchain spectrum from miners to facilitators to software. Got them all. It's a good fund. So own some DApp. Go ahead and buy a little bit today. And if it falls to 5, buy more. All right. Have a good weekend. I am working all day Saturday and Sunday to get caught up from all the babysitting I've been doing while the weather is still good. You may be able to hear in the background, maybe not, but they are fired up to go swimming. All right. Talk to you soon.